I really want to ask what China could do as a practical matter. I'm going to put up a chart here now that shows the level of imports that China has from the United States overall, according to U.S. Census data. And actually what it shows is, over here on the right, they only import about $150 billion worth of goods from us. So how could they impose tariffs on $150 billion?
Well, this is a great question, David. I think, in fact, I've seen some figures suggesting it's less than $150, in fact, which begs the question as to just how China will respond and where this goes next. We have had a statement from the Commerce Ministry today saying that they will defend China's people and the nation to the end, like you say. Now, I should point out we will have a press conference about an hour from now where we'll get more details. But the thinking now among economists and analysts is that China may move beyond the world of tariffs and into the world of non-tariff barriers. So they may target orders for existing US goods from Chinese firms, or they may target existing US investment in China. So there's a sense that we're now going to uncharted territory, and that unless negotiations do find a middle ground in all of this and do find a way out, then we are headed down a much more difficult trade path than anticipated as recently as a few weeks ago.
Well, exactly, and I wonder whether the administration really understands the extent to which U.S. companies have made investments in China that have nothing to do with trade across borders. For example, General Motors manufactures their cars in China. They don't ship parts or cars across, but they could really be hurt if China put their mind to it.
No, absolutely, David. There are two angles on this. You've got a supply chain, which is a very interlinked and deeply woven regional and global supply chain, so you can't just tackle China. You will hurt other countries and other companies as well. But also the significant amount of US investment in China and US profits generated in China that aren't captured in the goods data. For example, Starbucks, as you know, opened up its biggest store in the world in Shanghai at the end of last year. You know that Disneyland is operating in Shanghai. You know that Apple sells huge amounts of iPhone in there, along with all of the other US automakers, for example. So the goods deficit story doesn't capture all of the trade that's happening between the US and China. And that's why economists say the US might be vulnerable to non-tariff barriers if that is the route that China chooses.